Some are saying that we're headed for a recession. My opinion is that it's already here. This will be my most important video of the year. Let's data dive. Hey everyone, welcome back. My name is Tyler Nethercott, better known as T-Pott, and today, a somewhat sobering video. Those of you who know me know I'm all about authenticity, about integrity, and about shooting you straight. So this week, I'm mostly staying out of market movers and getting a little more philosophical. I want to take a moment to reflect on the last 3 to 4 years in the card market and to retrace our steps, to look at where we've been and where we are now and where we might be headed. As always, if you would like to try out Market Movers, simply visit marketmoversapp.com and use promo code TRIAL for 7 days free. Now let's get into some charts. So one of the things that I want to start out with, I'm kind of really taking, like I said, a more philosophical approach here. I'm going to show you a whole lot of charts, walk you through it, narrate, and none of this is meant to be hard and fast. None of this is meant to be creed. None of this is really meant to be certain. I would welcome any of your comments and thoughts on this topic down in the comments or DM me on Instagram. But let's think first about who has joined the hobby. We're going to take some different views at what's happened over the last few years. So who has joined the hobby? And I put this chart together, totally hypothetical. Numbers are not set in stone, but more of a conceptual view here with some kind of rough estimates, okay? So you see the different lines here. And this isn't meant to have any y-axis metrics associated with it specifically, simply showing the growth of different groups of participants in the hobby over time. So what you see is this blue line, the pure collectors, a mostly straight line sloping upwards over time. I'm going back to around summer of 2019. That's when I really started getting more serious personally back into the hobby. That's roughly when Jeff started Sports Card Investor as a podcast and a YouTube channel. And that's when a lot of people were starting to discover things and rekindle the nostalgia of their youth. That line pretty much steady over time, just sloping up gently. Definitely we have seen more growth in the pure collector category. These are people who, they really don't look to sell a lot. They're in it for the hobby. They want to collect cards, they love the cardboard, and they're just building up their collection in a way that's meaningful. Pure investors. I have no idea how much this group has gone up or down since summer of 2019. But this is kind of what I projected. And for this model, what I really used was data from several cards, as well as from our indexes from the SCI 500 to sort of see the ebbs and flows in prices and in sales volume over time. And so if you see this line of red, very, very low. I think if you were to go back to 2019, the number of people just in it to make money, totally ambivalent and indifferent about the cardboard just to make money, very low portion of the hobby. Why? Because it wasn't super lucrative back then. That hadn't happened yet. We see that group starting to go up, and then in around August of 2020, we see this huge spike. A big spike, a surge in interest, and the number of pure investors, people coming in just to flip, get rich quick, they come in and they start injecting a lot of capital. There was a dip. We end up back in that early spring, late winter of 2021, the euphoria, February, March into April, crazy numbers, all-time highs on pretty much every single card in existence. And then the progressive crashed, sharp crash back down into the summer. Another slight bump in the fall of that year, and now ultimately down. And I think what we're seeing recently is a lot of money, a lot of pure investment money exiting. People who don't care about the cards are now going, oh, this has been a downward market now for over a year, continues to go down, I'm out, I'm liquidating, and we're seeing kind of a snowball effect with that. And then there's this group of the hybrid collector investors. This group, I think, is the majority of people. And I've got them starting out here back in 2019, slightly greater numbers than the collector group. It may have been a lot greater than the pure collectors. But that group kind of going up, now shooting way up here. And I think it was a lot of people coming in, finding their cards from their childhood, and then coming back into the hobby, but also looking to make money. Similar trend, but now tapering off to a less extent, not declining as sharply and in the same way as that pure investor group. And the green line at the top is the aggregate of all of these. That's the total number of people. And so I think that group overall is up. It's just the sum of these, probably somewhere to 300 to 400% in terms of the number of people now participating actively in the hobby. I think that's what you could total that out to. So if we break that out, just to see each of these lines more clearly, collectors only, again, steady line up, 200% or so is what I would estimate. That could be way off, but again, kind of conceptually relative to these other groups. Investors, maybe flat, maybe back to where it was in like early winter, late winter of that 2019-2020 year, but definitely significantly down. And then you can see the hybrid group and the total hobby participants following a very similar curve, both of them up in that time frame. But the who is not the full story here. Obviously, looking at the number of people participating drives demand, drives prices up. It's also what are they after and how are they participating? How are they going about their business in the hobby? So I'm going to walk you through something, kind of a journey. And this is something that I saw originally shared on a video by Signed and Slabbed on Instagram. It was one of the things, probably one of the most insightful things I've heard in a long time about the hobby, about the journey of the hobbyist. And he talked about the different phases that you go through. And so what I did here is I created this matrix, okay? High price per card, low price per card, right? So how much money are you spending on the average card that you purchase? And then low variety, fewer cards that you're buying, up to a higher variety with many cards. And I think most people start when they get back into it down here in the nostalgia phase. If you're a 90s kid like me, you got back into it and you start going after those 90s cards. You want to buy things that remind you of your childhood, give you those warm fuzzies. That's where I was. I started out low price per card, not spending a ton of money, just kind of getting my feet wet, lower variety, kind of focused on that 90s space. But then you start wondering, well, what else is out there? What about the players that I like currently? What about the teams that I like currently? What's this Panini stuff? What's Topps doing these days? Whatever happened to Fleer? You start discovering what's new, and you're discovering the modern card market. And as you do that, you start spending more money for a few reasons. You're getting more comfortable with the price points. You're also having to pay more money for a lot of ultra modern stuff. And you're getting a higher amount of variety because you're discovering all of these new sets. Then you go through a phase of going, oh, wait a minute, what's actually good here? Is any of this stuff that I bought, any of this stuff that I thought was cool, is any of this good? Oh, you mean this player worn patch isn't actually that important? There's a ton of these. I thought this was really cool. And you start discovering and sort of doing that sorting of the wheat from the chaff. And you're finding out which cards are actually most sought after. Variety still increasing potentially. Maybe you're not selling that much still at that point, and you're starting to spend even more money because you're really uncovering the super cool stuff that's out there. Hard shift to the left, maybe even a 180. At some point, most hobbyists, the average hobbyist, starts paring down what they really love, down to what they really love, and dumping, I'll call it the hashtag regrets cards. Those ones that they were like, oh, I shouldn't have bought that, I didn't know any better, or now I overpaid for that. They start taking losses, maybe they start selling stuff off at a profit, and they start the consolidation process into higher end cards, into cards that are more rare, that are more scarce, and that's the consolidation phase. Then this can happen to a lot of people. Maybe you had no interest in vintage, or you had no interest in sort of niche stuff that you didn't really understand. You were kind of following the masses, sticking to the flagship type of products, or kind of just stuff that everybody goes after, and you start going, well, I don't know if I like that so much anymore. What else is out there? And you go through a vintage phase, or you go through an SSP, kind of cult favorite phase where you start set building on something nobody else really knows anything about but was rare from 2013. So that's the pivot up. You start spending even more money per card, and you shift back to a little bit more variety again. You're expanding a little bit, you're keeping that stuff that you cared about, but you're shifting into it. And I said, suddenly you understand mantles. Suddenly you understand Sugar Ray Robinson. Suddenly you understand Babe Ruth or George Mikan. And then finally, shifting back again to lower variety, you start upgrading. Maybe you upgrade your vintage from a PSA 7 to a PSA 8 or 9. Or you start chasing real grail cards. Instead of the 1 in 288 pack inserts of Jordan, you're going after the PMG. It depends on your income, obviously, and what your journey is. This is not hard and fast for everybody. This is a very normal cycle that I bounced off of a lot of people after I heard this, and that really resonated with those people. Many of them could plot exactly where they were in this process. And for me personally, I just got to this kind of like vintage curiosity phase. I have a lot of cards. I actually still have a ton of variety. I've started paring down. I send some stuff to ComC and off to consignment. I'm trying to consolidate to what really matters to me. And I would say that this is typically a 2 to 5 year progression. Maybe on average 3.5 years in, that's about, like I said, where I'm at in this journey. And so that's kind of the cycle. And this really has to do with understanding the psychology of the collector as they're working their way through everything that the hobby has to offer. I thought this was really insightful. Now let's shift into some economics, Economics 101. This is a slide from an episode I did a while back. I don't remember exactly when, might have been January of this year, talking about scarcity. Obviously scarcity being rarity plus demand of a card. So you have two types of rarity: actual rarity, meaning low print runs, low supply, low availability of the card, low variety, and fabricated rarity, low pop counts. This could be due to the era, obviously stuff vintage, 90s, very hard to get PSA 10s. Could be due to low print quality. We've seen certain Prism rookie cards even in the last few years have issues. Shea Gilgeous-Alexander's base Prisms were like really tough to gem and get a 10 on because of centering issues, examples like that. And then from a demand perspective, you have variable demand. This is the short-term demand due to hype, good or poor performance, big news, new releases, and number of people in the market. Again, we're looking at those curves that I originally shared. Sustainable long-term demand has to do with proven greatness, all-time greatness, time-tested designs that are loved by all, iconic cards. This is everything about scarcity. And so now if we look at this demand versus supply, this is not a traditional supply and demand curve. I'll have a few of those in a moment, but I'll walk you through this. What I did was I made 4 different theoretical groups of people entering the hobby over the last 4 years at different junctures. So Group A is a small group that came back into that nostalgia point back in 2019, in that summer, July of 2019. Smaller group, they entered the hobby, and then they see some attrition. That's sort of, let's say, a fixed number of people that see some attrition to their numbers over time, okay? Group B came in 2020, larger number of people. Came in 2020, slight attrition, down like 5% on the original Group A, who just lost interest. So we see a bigger group. And these are the totals progressively in this dark blue line growing over time, the number of people. And I'm equating this to demand, number of people to demand, okay? More attrition on the original group. They're in their 3rd year, really, or entering their 3rd year of cycle maturity. Group 2, then another bigger group, Group C, coming into the hobby, okay? And then we jump into 2022, and I think that's where we see this attrition. There are new people entering the hobby now. There definitely are new people coming in. Fewer people coming in than what we saw in 2021. In fact, maybe a little bit fewer than what we saw back in 2020. I think downward market, people are kind of wondering if they should get involved in cards, plus the economy. And significant fall off from that group of people who entered in 2020 to now. A lot of those pure investor types, a lot of the collector investors who have lost money, who bought at the wrong times and are jaded and frustrated and are exiting. So that's the total demand cycle, and you can see the lines and how they're reflected. Now, what about the supply? What about what's available? Well, we know we have existing cards available in yellow. A whole market of cards that existed and compound year over year. And so that's what we see here. We see this supply. These are theoretical numbers. Again, I probably meant to hide this left bar. This was just meant to sort of build the graphs visually, conceptually. But here we see this growth, and obviously every previous year of new products, new cards being built into then the next year's existing card totals, and then adding up to the total number of cards available. And what we see here, if we look at 2021, is that in theory, demand was outpacing supply. So printing presses opening up, lots of printing happening by the manufacturers trying to keep up with demand. You can't find products on the shelves at retail or even hobby shops, everything being marked up 3, 4, 10x on the secondary market. Now with this fall off, plus the manufacturers still presumably 1.5xing or doubling the number of cards being printed yet again, there's this separation. Now we have a surplus. Excess supply leads to downward pressure on price. One of many factors leading to downward pressure on price right now, but definitely one of them. Loss of demand, increased supply, price is obviously going to come down. That doesn't tell the whole story. That's the who's involved, that's the supply, that's what's out there. But what about these original two groups, where they are in that maturity cycle, okay? From nostalgia all the way up now into that somewhere between 4, 5, and 6 on that chart that I showed you earlier. So I've changed the color scheme here just to kind of group A and B together. These are the people who entered in 2019 and 2020. By now, they don't have a demand for all this new stuff that's being printed. In fact, many of them are pretty frustrated with it. They're even maybe totally turned off by it, want nothing to do with it outside of short print, super short print, Grail type cards, Prism Golds, and photo variations and things of that nature. They don't want that. They want niche cards. They want a very specific set of cards, and that's this bright, pink fuchsia color line here down below that's still down below demand. The supply of those cards, below demand, creating scarcity, creating, price stability. We're still seeing some cards selling for record highs, and that's part of the reason why. These are cards that never enter the market, and so when they do hit auction, there's sort of this convergence of people with all their eyes on it, still competing for those cards. And those are the types of cards that can be the ones that are the best hedges against inflation as we're heading into or in the middle of a recession. Those specific cards that have niche demand at that foundational layer of collectors, no matter what's going on in the market. The problem can be that they can be pretty cost prohibitive for a lot of people. So there's something to think about with that. That then ties into that consolidation piece where people are going, oh, my stuff that's super commodity, super ubiquitous is losing value. Let me liquidate and upgrade into a Jordan or a Kobe or a Gretzky or a Brady or a Jeter or something else like that, right? And so again, most mature hobbyists, they don't want that stuff. They want the niche stuff. Little, fun here with the Toy Story meme that everybody knows, that I don't want to play with you anymore. All of this stuff up here, I want to focus on the stuff that I care about the most. Another chart that I used in a previous episode a while back now. This was an episode I did showing the growth in the number of sets and variations, not just print runs, but growth in sets and variations since 1980. Data from Trading Card Database, and you can see a set in this case, according to TCDB, is actually a variation. So Prism base cards, Prism Silvers, Prism Red Wave, etc., Ruby Wave, those would all be a set in this case, okay, when you see these numbers. So this is not, over 3,000 distinct products, a set being a variation within a product. But look at this growth. The one thing I didn't do is I didn't total these up. I lost my original chart to actually total these numbers, but this is the junk wax era. Base cards, no creativity, just base cards. If you grew up in that era, you might like those designs and have a nostalgia. A lot of people don't. They just think they're ugly cards from the 80s. Golden era, as I called it, the 90s. Think about these print runs, but I want you to really stop and think about something here. There was a lot of interest in the 90s still in cards. And at the time, it felt like there was too much variety, too many sets. Even Kobe looks like he has a lot of different rookie cards. So many that it's hard to know which one to buy or which ones that people really gravitate toward. Look at these, the amount of variation, the number of sets and variations from this era compared to recent. So I call it the advent of inserts, the advent of parallels. We saw the birth of refractors and foil and all of this stuff, right? Die cuts. The 2000s being the forgotten era, many collectors exited the hobby. They got jaded, the print runs were skyrocketing, the cards weren't valuable, they got into later stages of their life and cards were considered dorky and something for kids. Early Panini years, they struggled. Fewer collectors, but there was still more variety. You might say this was a healthy amount of variety based on today's demand, being 8 to 10 years later, that was the right amount, but they continue to scale that up. And I call this the Panini explosion, the renaissance of interest in the card market, old collectors return and new people enter. but this is what people are calling not only the junk slab era, but what we might call the junk variation era. There's so much variety. If you were to just total up 2016 to 2020, just looking at this chart off the top of my head, it looks like you could go back 20 years, maybe more, and total up all that variation, and that's where it would equal. So unless demand is outpacing that level of supply for these cards, you're gonna see this sort of latent decline in prices automatically on a lot of this stuff from the last few years, just because people will be losing interest in it. Because the average collector or collector investor will be going through that maturation cycle and wanting nothing to do with a lot of this stuff. And then what happens to those cards? Plus, we can only focus on so many players at a time. Shifting gears a little bit, but similar, look at the number of rookie cards by player. I referenced this in one of the cards on the table episodes we did recently, again from that same previous episode on Data Dive I did as well. Gary Payton had 10 rookie cards. That's it, 10 total rookie cards. Michael Jordan, slightly more than Gary Payton. Kobe Bryant, that's if you go 84 to 86. Kobe Bryant, 101 distinct rookie cards, according to Trading Card Database, different variations, okay, of the same card. So that's everything from his base tops to his tops chrome base, refractors, finest airs, gold refractor, all of that stuff, right? Metal, 101. I loaded all of those cards personally into Market Movers 2 years ago or so. Built them all out, and it took time. I said, we gotta have all of Kobe's rookie cards in here. That took a lot of time, and it looks like a lot of cards, and it is. 101 rookie cards for a player is a ton of rookie cards. They have to be a generational great in order to even sustain demand at that level at 101 cards for that player. LeBron has 486. Now LeBron, obviously, also all-time great, even more demand than Kobe, right on par with Jordan in most people's eyes. 486 rookie cards. Giannis slightly fewer, back in 2013, early Panini years. Luka, well above that, somewhere at 1,1300. And Zion, ironically, being a 2019 rookie with 2019 different rookie cards. Even if Zion Williamson can come back and get to form and be one of the greatest players, if not the greatest player of all time, which is obviously a long, long, long shot at this point, there will not be a sustained demand for all these cards. This is just the variants. This is not all the print runs. So when you're looking at Prism-based cards, when you're looking at Hoops-based cards or Hoops Premium cards, those cards aren't going to hold value. And we're starting to see that fall off now. We're starting to see those irrational prices from the euphoric period of late 2020, early 2021 come into effect. And again, this is stuff I've had in videos in the past. This is stuff I've shared. This is not anything new. This isn't something we were trying to hide. We've talked about this in our content on this channel and on our Sports Card Investor channel. Another chart I shared. The way that these prices come out for high draft picks now, which obviously drives wax prices to the moon, like we've seen with all kinds of wax over the last few years. It's based on the players in the box and what people are willing to pay for them early. Even if they become generational talents, that's the only way. That's the only way their prices can sustain over time, because of opportunity cost, because of the stickiness of the hobby and the recency bias, and because of like historical precedent. These athletes are coming out and their prices are more than proven Hall of Fame caliber players. I showed DK Metcalf prices being way more expensive than Calvin Johnson and Larry Fitzgerald. I saw a great video on Instagram yesterday, Find Your Trove, posting this video comparing Mike Trout's Superfractor to Jason Dominguez and Paul Goldschmidt and all these athletes. It's crazy. This is what happens. And I'll just kind of touch on this. Same player, different scenarios, okay? Assuming a high draft pick, top 3 draft pick in the NBA or something. And what could happen to their prices? They're all coming out at $2,000. Who they become long term is unknown in year 0 when their cards come out and when they enter the NBA. They have different possible outcomes, everything from generational talent all the way down to a bust. And here's the evolution of what happens to their prices over time based on each of those trajectories. In year 1, if they are superstar, if they're pretty good, looking good, their prices will almost certainly still go down. Our data shows that strongly for every single player in our database. There is not a player, a top 5 draft pick, who has come out whose prices haven't gone down sharply from the time that they first released the products. Year two, if they're looking good, maybe they had a rookie of the year, they're looking like a top 20 or 30 player in the NBA already, maybe they rebound back slightly above where they started. And then years 3 or 4, maybe they're looking good, they win an MVP or they're all NBA, they could see a slight bump. And by year 6, if they're a superstar, they're probably right back where they started at that high point of year 0 when the product's released. Everything else is a total bloodbath. It's down, 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 down if they are not the absolute best player of their draft class and of a 5-year span of the draft class. And generational talents are the ones like Giannis who can go from 2,000 to 20,000 for the same card. But it's a needle in a haystack. So this is what that chart looks like. Here's all the other scenarios. Here's the generational talent price trajectory. And if I remove that generational talent, you can see all of these players losing value. Only the superstar one holding value, everything else going down in price. That's another part of this broader dynamic of what we're seeing now. Supply and demand. Man, I hated economics in college. I really didn't like it. It's important, but it didn't intrigue me a lot. I'm a little more fascinated now in my older age, and especially with what's going on with the economy. But this is back to Economics 101. Supply and demand, price on your y-axis, quantity on your x-axis, okay? And you've got your supply curve and your demand curve and the way these things move. So what we saw in 2019-20, and I split these into the cross years because that's kind of how the market evolved. It was heavily tied to basketball seasons. So 2019 into 2020, demand went up. Demand undeniably went up. And this is what we saw happen. So this is how you determine, map out the price, what happened to price and what happened to quantity, okay? So price goes up because demand goes up. Let's say supply stayed relatively static, and you're really looking at the supply of the product from the year before. So 2018 product pushing into that year with 2019 starting to be released, okay? So this is what happens. Price goes up, quantity goes up as demand increases. Shift to 2021-22. Demand skyrockets. Why? Pure investors entering, lots of hot money entering. Collector investor, the whole number of people participating in this space is just going up like wildfire. You've got the COVID lockdowns, you've got money, free money, people sitting on stacks of money, they're bored, all of those different factors, right? Supply also increases then. The manufacturers with a 1-year delay are starting to catch up. They're increasing supply, and so price still up, quantity through the roof. Sales volume on cards absolutely through the roof from about August of 2020 to March or April of 2021. We saw an incredible number of cards being sold consistently and a high amount of wax being sold. So that's what happened to the prices and the quantity. 2021-22, demand resetting, coming back down to where it was back into the 2019-2020 transition when it boosted. The problem is supply has increased. It's continued to increase. It's probably increased more than this. I was sitting and tweaking with these charts for a long time before I finally just said, I gotta keep moving on. So again, this is more theoretical. But then we saw quantity shift some, volume shift back some, but price drop back significantly. Price back where it started, maybe in 2019, 2020. Actually, a lot of cards, and I'm gonna get to that next. That's what happened to those cards. But volume still up significantly from 2019, 20, where it was then with the number of transactions happening, okay? Now, this is Luka Doncic, Prism Silver, a card, the card we've used more than probably any other card since this channel and Sports Card Investor was launched. It was kind of synonymous with that era, right? A lot of sales history here, a lot of price movements and changes. I had a little bit of fun with this, mapping out exactly what has happened over time here, okay? So, heading into 2019, 2020, 6 to 8 years or so of absolutely unprecedented prosperity, comfort, ease, luxury, a lot of disposable income, countries flourishing, record highs, everything, leading up all the way through the last administration, right? So foundationally here, we see where these cards, the price started here and kind of spiked up. We built a baseline of green, of organic growth, okay? COVID happens, lockdowns, stimulus checks, boredom, stored up disposable income that's not being used on trips or other eating out, dining out, anything. People just have money piling up as they're working. We call this the hot money. This is the hot money era. And people have referred to this period as though we put jet fuel or rocket fuel onto the market. All of those things coalesced together. We thought for a minute it was going to collapse, and instead it did the exact opposite. And that's back to that era again, like I said, August of 2020 up through into March, April of 2021, and then it started to come back down. That was the rocket fuel era. You can see it. It was hot. It was on fire. Then we see this little bit of maybe a dead cat bounce, if you're familiar with that term. Things start coming down sharply and people go, wait, maybe it's not so bad, and there's a little bit of a recovery, right? I don't know if really that's what's happening there. I don't remember exactly the timing of when a lot of the restrictions got lifted and people were out to do more and had a little bit more hope and optimism about what was going on. That's when we saw a lot of debates in the public forum about inflation and what's happening, and a lot of the people saying, no, there's no inflation happening. Other people saying, absolutely, there's inflation happening. It was a bit of a weird limbo era, and we saw some recovery in prices. Now, inflation, stock market declines, interest rates climbing rapidly, wars and rumors of war. I didn't put crypto on here. Everything kind of coming back down, and here's that jet. It's coming down, and it's coming down hard. So, where are we now? Prices back to late 2019, early 2020 levels. If you trace that line all the way across on Doncic, on Mahomes, on a lot of these key athletes and players, that's where we are in terms of price. Certainly others up, others down, but that's where we are. We're still up about 400% on price on this Luka card. If you had bought this Luka card back in 2019, you're up 400% still on your money if you're still holding that card. So I'm calling this the organic, healthy, non-GMO growth period over the span of 3 years. And this also ties in nicely, albeit with a lot of confounding factors, to some of the demonstrations that I've done in the past about Elliott wave theory. We saw the spike, a down, we saw another spike, a down, we saw another spike, and here it comes, dead cat, down. I would expect to see some recovery at some point. It could be drawn out depending on what happens with the rest of the market. Progressively over time, I expect the overall market, not necessarily this Luka card, the overall market, more of that index view, the macro view of the market, to climb back up. It's going to take years, I believe, years to get back to the point that we did back here in that 2020 to 2021 period, if we even get back there anytime soon whatsoever. So that's kind of what happened here. So what's next? I don't actually know. I've said this before, I don't have a crystal ball. I have this conversation a lot with friends, a lot of fellow people in the hobby community about what's next. Next week, what I want to do is I want to talk about why selling at the peak is extremely difficult, why it's somewhat of a fool's errand, how the illiquidity of cards can be a challenge, especially in a time like this when maybe you're trying to suddenly consolidate and get into those higher end cards. It's not simple. It's why making comparisons to stocks is really imperfect and a totally different game than working with cards. But you do still have some options depending on what you want to do and if you want to take losses. And again, I want to talk about recalibrating and regaining focus, solidifying your identity as a collector and what you hope to do long term with your cards. So that's what I want to talk about next week in the episode. So overall, no matter how you slice and dice the data, there can be no denying that the collectors are the backbone of this hobby. Some collectors only buy, they consume, and they never consolidate. The vast majority of collectors do sell. Whether they call it investing, they call it speculation, call it flipping, call it trading up, whatever they want to do, dealing, whatever you call it, most collectors do it. And in a perfect world, you can fund your PC with your bigger card hustle project. And that's who we're left with now. That's likely those of you who just stuck it out through this long video, this kind of teaching professorial lecture type video. You're the collectors. You're those of us who make up that estimated 300% growth in the participants in the hobby since 2019. And most of us are here to stay. I know I am, and I hope you are too. Now, as Jeff has said recently, many times, I'm also super optimistic about the future of this hobby. I'm optimistic about what Fanatics can do. I'm optimistic about their ability to fix some of what's broken in the ultra-modern market today, and I'm optimistic about the connections that have been made between members of this community remaining strong and growing, and only fueling the overall growth of the hobby. I'm also really optimistic about the continued maturation of those of us participating in the hobby, continuing to learn and continuing to find our niche and where we really like to live and thrive with what should be a lot of fun. So the overall economy, on the other hand, that's a huge wild card. There's tons of debate, tons of uncertainty right now, and a ton of forces all simultaneously coalescing into a whole lot of downward pressure on prices. Hobby-specific pressure, obviously on cards, as well as that broad economic pressure is what we're seeing. So if you're currently sitting on a lot of cards not knowing what to do with them, I really can't answer that question clearly for you. I can't make the decision for you about whether or not you should hold or sell. It really all depends on what your goals are, what cards you're holding, and what your overall personal financial situation is right now. I will say that you should watch Jeff's recent video on this topic over on our Sports Card Investor channel if you have not already. We can put the link to that video up here. It's about that sunk cost fallacy, and I'll just say that I just sold over 100 graded cards of my own with the intention of taking some of that money and consolidating into other GOAT type cards. I've been buying some Kobe's and Jordans, just trying to get something a little more specific. And also keeping some of that money because my wife and I have another baby coming and diapers are extremely expensive. So as I said, next week I'll hit on this a little bit more about why it makes sense sometimes just to sell. Forget about the peak, forget about what you're into it for, and sell the cards, and how to clarify your own identity as a collector so that you can have fun no matter what the market is doing overall. Thank you so much for sticking with me today. I hope this is valuable. I feel like this is such an important topic. And if you wouldn't mind, be sure to subscribe if you haven't already. Hit the bell icon and leave me a like and a comment down below on what you think about all this. What are you doing with your cards? Until next time, happy investing and happy collecting.